Hello, it's Jordan, and this video is being recorded on Monday afternoon, June 27th, 2016. Thank you for joining me today. And in this video, I'm going to talk about the potential impact of Brexit on gold, and with respect to that, how gold looks against foreign currencies. So, starting out, you guys know that I'm very strong in my belief on the fundamental driver for gold being negative real rates or falling real rates. And here is my updated chart of that. You can see on the screen plotting the real Fed funds rate in the middle and the real 5-year yield on the bottom. And as you know, both of those charts have gone more negative since about the middle of 2015. So the fundamentals in this respect for gold are definitely bullish. But let's move on from that for a second and talk about what Brexit means exactly. And I think Brexit is potentially a very bullish fundamental development for gold. And the reason is simple is because Brexit raises questions about the long-term stability of the EU, and as a result of that, the euro as a currency. And in the wake of Brexit, we see gold showing quite a bit of strength against the British pound and also the euro and other non dollar currencies. So, if the market continues to worry about the EU, the stability of the euro, and a real contagion effect there in the long term, then the environment you could see is not only gold bullish, but US dollar bullish. And so let's move on from that and look at some of the charts. And in this chart here, I plot three things. The first, or three ratios, I should say. The first is gold against foreign currencies, which is typically the chart I use for that, and that's gold against the inverse of the US dollar basket, which is mostly the euro and the yen. Now, the middle chart is gold against the inverse of its trade weighted index. So that's a different index from the US dollar index. And at the bottom, I plot gold against an emerging markets currency basket. And one thing I talked about in my book is that gold priced against foreign currencies, historically around major bottoms, gold priced against foreign currencies will bottom first and usually as a leading indicator. And we can see that here based on all these charts, gold price against foreign currencies. Basically, the bear market in that respect ended at the end of very end of 2013, or you could say 2014, and of course, gold and U.S. dollar, gold and U.S. dollar prices followed suit. And but looking at what we see here recently is gold against foreign currencies has broken out, and it's been a strong breakout. You know, it's been a huge move the last couple days, so we could get a retest or some backing and filling. That wouldn't be a surprise. But I mean, looking at where these charts are, particularly the top two, I mean, in respect to gold in U.S. dollar terms, I mean, these charts are looking as if they're at 1,600, which is about $300 ahead of where gold is in U.S. dollars. So, I mean, I've been talking about recently, I think over the next 6 to 8 months, gold has a chance to run to 1550 and really recover most of the bear market. I mean, when gold fell below 1550, that's basically when it crashed and everybody realized it was in a bear market. So I think there's a good chance that gold could fill that in the next 6 to 8 months. And what we see here with respect to gold against foreign currencies is gold against foreign currencies has already done that. It's already gotten up to that point. It's way ahead, and that's normal. That's typically what happens. And again, gold and U.S. dollars, I expect that to follow these charts here. And drilling down here, more specifically, we plot gold against the individual currencies. We have gold against the euro, gold against the Canadian dollar, gold against the yen, gold against the British pound, and gold against the Swiss franc. Now, we did not include gold against the Aussie dollar, which is the strongest, and we'll get to that in a second here. But basically, gold is very strong against every currency except the yen. That's because the yen's been very strong, but the yen was very weak a couple years ago. So, relatively speaking, gold priced in yen is still it's held up well compared to where it was, 2011, 2012, 2013. But back to gold against the Aussie dollar. I don't show that chart here, but if you're looking at weekly prices, if that closes where it closed today, it's going to close at a new weekly all-time high this week. So that's the strongest. Gold against the Canadian dollar looks to be the second strongest. And I mean, aside from those two, like I said, everything else is strong in a bull market, a clear bull market, except gold against the yen, which is trading below its 400-day moving average now. Now, so what exactly does this mean for the mining sector in the gold stocks if we have the US dollar rising and gold rising? Well, that means that relatively speaking, the companies, the producers who are operating in foreign jurisdictions should outperform those that are operating in the US. But that's just a general point. I mean, if there's a company in the US that's very strong and gold's going up, I mean, it can perform better than something that has a better currency situation. But generally speaking, this is something to keep in mind. I mean, looking at gold against the Canadian dollar and gold against the Australian dollar, they made very strong moves in 2014, 2015. So those stocks, those companies operating in those jurisdictions, their costs were much lower because of the weak currencies. And so if we see gold rising and the US dollar rising, what I'm saying is pay attention to where companies are operating, talk to them, ask them, are they going to benefit from the lower currency? Because some do not. And it's not just in Canada and Australia, it can be in other places, but it's just something to keep in mind because if a company's producing in Australia, I mean, their gold price is basically at an all-time high, so they're in a better situation than someone who's operating in the U.S. So that's something to keep in mind. That's all I have for you today. Thank you so much for listening and watching. You can go to my website, thedailygold.com, to get my book for free. It contains all the major research I've done in the last couple of years. You can also go to thedailygold.com and learn more about my free newsletter and my premium newsletter. Thanks for listening and watching, and I hope to speak with you again in the next week or two when I have another video.